the community governing MakerDAO, the decentralized autonomous organization behind the stablecoin DAI, has paved the way to purchase up to an additional $1.28 billion in U.S. government bonds via crypto asset manager BlockTower Capital. It's something of a fascinating move from arguably the premier over-collateralized decentralized stablecoins, and the intended purpose here is to further diversify their token reserves, or the assets backing the coin. But it's also interesting that it's happening right now, given that USDC issuer Circle actually just sold off all of their treasuries, which are substantially more, as concerns over a potential U.S. default have swelled in recent months, although it looks like we've averted that, at least for now. The centralized stablecoin moved away from holding U.S. government debt, even as the decentralized stablecoin is moving towards it. Will, what's your take on this one?
Yeah, I have a lot of thoughts on MakerDAO. And to be honest, I have not followed along with a lot of the developments over the last 2 years. There's been a lot of back and forth. They've been adding real world assets, or RWAs, as we like to say. There's been Rune coming back into the picture. He's a co-founder of MakerDAO. He was there, and then he wasn't there, and he came back and forth. There's a lot of drama there. Overall, what I see with MakerDAO, however, is that they're adding these real world assets. They're increasingly making ties with lawyers, increasingly making ties with hedge funds, and increasingly making ties with non-crypto collateral. There used to be a time and place when MakerDAO was only backed by ETH and I believe the Brave token, right? So it was like purely a crypto project. And DAI was a product on the other side. You could put in ETH, you could put in the Brave token, and you'd be able to take out DAI as a stablecoin. And like you said, Adam, it was over collateralized. So if the price of Ether went down and you had a loan out with DAI token, you would be liquidated, or you'd have to top off your loan. Nowadays, we have like this meshing of the two worlds, and maybe this was like the runway for Maker, but increasingly I see a project that is susceptible to the real world, susceptible to lawyer contracts, and susceptible to anything that comes along with that, right? Like the contagion in the actual financial industry is now ever more present. I think this enables them to grow the project bigger, but I think it's a far cry from what it once was. Zach, to you.
I mean, the crazy thing is that USDC, I believe, is one of the larger assets now backing DAI, right? So there is a bit of like risk diversification going on by virtue of this move in response to what USDC is doing, right? USDC is moving away from US Treasuries, but given that USDC is arguably, I think, and again, I'm trying to check the stats on myself here, arguably, I think the biggest asset backing the decentralized stablecoin DAI, would make sense that they would want to take on some treasuries as a potentially low risk alternative to what USDC as an issuer is doing itself. So these things are very intertwined, and I think DAI has come a long way from its truly crypto native roots, right? It's trying to sort of embrace both like experiments around real world assets. Its asset backing is obviously much more significantly kind of tied to the world of centralized intermediaries now than it had been. And so I think it's kind of an interesting response to what USDC is doing, probably just because USDC is such a big part of the pie in terms of assets that are backing this stablecoin DAI right now. So it is funny to see these things kind of moving in divergence, but then when we think about their interrelations and their interconnectedness, maybe there's some holistic picture that makes sense, but I'm not quite sure. Jen, what do you think?
I'm going to make Adam tie all the things together for me. So yesterday, MakerDAO announced that the community voted to get rid of $500 million worth of the Paxos stablecoin. And they said it was because they wanted to focus on their own stablecoin and it wasn't accruing any revenue. And now we get this news about the treasury bonds. I think that in general, DAOs need to diversify their treasuries for obvious reasons. But can we connect the dots between those two pieces of news? And what does this maybe tell you about MakerDAO's long-term view? Like, my understanding of U.S. Treasury bonds is there things that you would want to hold on for a long time, which doesn't really bode well with like the DAO and DeFi ecosystem in my brain.
Yeah, so I think it's a good question. Treasury bonds, to be clear, can be very low duration, right? You can be talking about like a 3-month contract or something like that, effectively, like just a very, very short-term lend. So they also go up to, 10 plus years. So that's not really the consideration here. I think the thing that's interesting is that the world is a dangerous place right now. And again, like the only way that you can really know that the investments that you have are going to keep up with the increasing costs and kind of all of the challenges, stability stuff around the world right now is by really, really being diversified. And it's an interesting move, right? Because to a certain extent, if they were to remain just in the world of, say, let's just say just Ethereum, then that means that to the extent that Ethereum goes down, that means that again the protocol has few options but to start to kind of liquidate people, right? Whereas if you're looking at a more diversified backing, then like this is the problem that USDC had, which is that essentially all of their assets were in treasuries. And so by keeping all of their assets in treasuries, it means that you could have a catastrophic failure due to the failure of that. Now, I think the challenge with this is that the world as it moves forward is likely to have some failures and some successes, right? So diversifying in this way is almost a conceit to say, hey, we acknowledge that the world is an unsafe place and that this is the kind of best solution that we can come up with, but it's not really a solution that's safe. But that's just because there isn't safety in the world as it stands today around financial assets. Zach?
Hey, just want to fact check myself. So at one point, USDC was something like 50% of the assets backing the DAI stablecoin. Currently, it's around 25%. So definitely not the lion's share, but certainly a significant chunk of those assets do have ties to the real world in terms of banks that are sitting on these dollars that sit behind the tokenized dollar in USDC that rides on various blockchain rails.